Have you been asked to allocate a lump sum purchase into separate assets purchase and you're not quite sure how to do it? Well, you've come to the right place because I'm Professor Capko and I'm going to show you how easy it is to do in today's video. But first, I want to say I believe something awesome is going to happen for you very soon, so be on the lookout for it. And now, back to the video. In this example, the accountant is being asked to allocate a lump sum purchase into separate assets purchased. So let's look at that. So many times a company might go out and purchase a bunch of assets all together. Instead of buying each one individually, it's a package deal. And often with package deals, the sum the price you're paying is less than the sum of its parts. So in other words, you're getting a deal by buying it all together. If you added up the cost of each item, or if you added up the market value of each individual item, sometimes that's higher than what the purchase price is if you buy them all together. So that is what is known in the industry as a deal. So in this case, Capko Inc. got a deal. They made a lump sum purchase of several assets on January 1st of 20X1. And it's for a purchase price of $820,000. The estimated market values for the purchase assets are building $478,500, land $239,250, land improvements $47,850, and along with it, there's four vehicles that are estimated to have a market value of $191,400. So, in other words, the company has come up with some sort of valuation of these items, whether they had appraisals done, whether they looked in market reports, maybe they looked up the vehicles on that type of vehicle on Edmunds or on Black Book or Blue Book, something like that. However, they arrived at these figures. One thing that you might not realize is that estimating the market value of something is more of an art than a science. We truly don't know the value of something until you actually sell it. You don't know the value of it till you sell it. In other words, what would a willing buyer and a willing seller agree upon as a price? And that is when you find out the actual value. So the song is right. You don't really know the value of something until it's gone. But that is something that I want you to keep in mind is that these are estimates. They're estimates. Sometimes companies have to estimate the value of their assets. Does that sound familiar for anything that's in the news lately? It should. It should. So without making a statement about that, just think about that. How do you know the value of something if you don't actually sell it to find out what it is worth in the marketplace? All right, in this case, we've got the values of each of these items, and I'm going to fill it into this chart. This chart is going to tell us ultimately the apportioned cost of each item. So I'm going to fill in the market value or the estimated market value for each of these things. So the building estimated market value is $478,500. The estimated value of the land is $239,250. The estimated value of the land improvements might be things built on the land like lighting fixtures. It might be a driveway or a parking lot, things that are not a building, but they do improve the value of the land. In this case, they're estimated to be $47,850. And the four vehicles combined have an estimated market value of $191,400. All right, so I've copied over those items into the estimated market value column. and we need to now total them. So to do that, I'm going to pull out my trusty BA2 Plus calculator. And if you want a calculator like this, I've got a link right there in the description and actually on your screen if you've got the right type of device, and you can pick up one of these for yourself. It's an excellent calculator and it's reasonably priced. So let's go ahead and add these together. So I've got 478,500, and I add to that 239,250. Continue to add to that 47,850, and add to that 191,400. When I add them all together, I get a total estimated market value of these items as $957,000. You'll notice right away that the sum total of these items is less than the total paid. So again, it's a steal of a deal. This is nothing unusual. Let me make that clear. This is nothing unusual. Oftentimes, companies will buy a lump sum of items and they'll get a better deal. And the party on the other side's happy to get rid of everything all at once so they don't have to find a buyer for each item. They're willing to take a discount. So this is common. This is not unusual. So it's very important to know how to do this sort of thing. Thank you for that thumbs up. It really helps grow the channel. And if you want to help us in other ways too, share this video with someone else that you think might get some value out of it. All right, so next we need to figure out what the percentage each of these items is of the total. So I'm going to look at the total here, and that is in my calculator, and I want to find the percentage each of these items is of the total. So to do that, we divide and multiply by 100. So to find the percentage of something, we're going to divide this value by the total to find out what percentage this is of the total. That's going to give us a decimal, and then we're going to multiply that by 100 so we can get a percent. If you don't remember how to convert decimals to percents and vice versa, I've got a video linked up here that will help you with that. So check that out. So I'm going to clear the calculator and type in the first amount, 478,500. That's the estimated value for the building. I'm going to divide it by the total estimated value for all the items, 957,000 even. And it gives me 0.50. If I multiply by 100, that of course gives me 50%. So half of it is made up of the building. So I type that in there, write that in there. Let's do the next one. I'll go ahead and clear. We now have for the land 239,250. I'm going to divide that by the total again, $957,000, and find out that's 0.25 multiplied by 100. That gives me 25%. So far, so good. Let's do the next one. I'll go ahead and clear it. And land improvements are 47,850. We expect this to be a very small percentage. I always like to tell myself, check my work by saying, what do I expect? Well, this is a small amount. These were hundreds of thousands of dollars, and this is less than 50,000. So I expect the percentage to be very small. So if you get something larger than 25%, you know you've entered something incorrectly. So that's a way you can check yourself as you go along. So that's the estimated value of the land improvements. I divide it by the total, 957,000, and that is 0.05 times 100, and that is 5%. And I feel like that's pretty accurate because it's much less than the other items, and in actual value, it's much less than the other items. Let's do the next one, 191. This is the vehicles. This is the last item, 400, and I divide that by the total amount, 957,000, and that is 0.2, which I multiply by 100, and that gives me 20%. All right, just to check, I've got 50%. I add to that 20. Let's go ahead and 50%, and I add to that 25%, add to it 5%, and add to it 20%, and we've got 100%. So 100% is this amount, and this is the percent each of these represent of that. So far, so good? Excellent. Now we're going to take these percentages. Now I'm going to kind of cut this off here because I don't really need to worry about these anymore because these were just estimated values. They aren't going to be that relevant anymore because what we chose to get from those is these percentages, and that's what we need to multiply by the total cost of acquisition. Now, if you want to help support this channel, one thing you could do is become a member. I've got some memberships that at various levels, 3 different levels. You just click the join button down next to the subscribe button, and it'll tell you about the different memberships. You'll get early access to videos. You can get some live videos and live interactions with me. I also give priority to questions students have, or people, if you comment and have a question or need a video made, I give priority to those who are members of this channel. So consider it. There's lots of options there. All right, so we need the total acquisition cost. The total acquisition cost is how much we paid. Well, the actual amount paid is this $820,000. And we paid that for everything. So I'm just going to put that in each of these here. We didn't pay it multiple times. We only paid it once. But I'm writing it in each one because we're going to multiply it by the percentage to find out what the apportioned cost is. So 820,000. And of course, our final version is 820,000 because that's the total amount paid. As I said, they got a deal. Clear my calculator. Now we're going to kind of unwind it the opposite way. We're going to take our percentage and we're going to multiply it by the acquisition cost, the one we actually paid. So I'm going to take my 50% and I'm going to write that as 0.5 and multiply it by the 820,000. And that gives me $410,000. That's the apportioned cost for the building. See how that works? Our portion cost of the building is $410,000. I can maybe leave this here. You can see it clear. And I've got 25%, so that's 0.25 times the total acquisition cost, which is the 820,000, equals 205,000. Next, we're going to take the 5%, which is 0.05, and multiply it by, again, the total acquisition cost, 820,000, and that gives me 41,000. And you'll note that each of these is less than the actual estimated market value. And again, that makes sense because we got, that's right, put it in the comments, we got a deal. So that's the case there. Lastly, we have 20%, so I'm going to clear here. 0.2 times the purchase price, 820,000. That gives me 164,000. Now, one last item here, just as kind of a check. What do we want to do? Let's add these apportioned costs up. So these are the apportioned cost, and what do we expect that to be? Well, right, because we did that, it should be the 820,000. Let's go ahead and check. So I've got the 164 in there. I'm going to add 41,000. I'm going to add the 205,000, and I'm going to add the 410,000, and that gives me, look at there, 820,000. That gives me a lot of confidence that I did that right. Now, these are the numbers. The apportioned costs are the ones that for the items that are depreciable, you're going to be depreciating from this amount, not the estimated market value, and certainly not from the purchase price. We're going to depreciate the building, land improvements, and the vehicles. You don't depreciate land. We're going to depreciate from there. So that could be the subject of another video, but that's all I have for you today. I hope you found this helpful, and if you did, please subscribe and hit that notification bell so you never miss a video. Thank you.